Good morning, everybody. It's Monday, February 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll get to it during the show. Quickly here, overnight markets had March corn down 3 1/4 at 396.5. March soybeans are up 2 1/4, 1135 1/4, and March Chicago wheat was down 6 1/2 at 567. We are now through 16 of 20 crop insurance settlements as of Friday, and currently corn is sitting at 466 3/4. Beans are at 1160 1/4. Hope everybody had a good weekend here, guys. Good to see you. We were talking this morning. I mean, not a lot of fresh news in the way of the markets here. We're going to have first notice day coming up here the end of the week. I know we got through option expiration there on Friday. Just continued data here, with the funds continuing to build a larger short position in corn. By some estimations here, we're at a record on a net basis. So kick it over to you guys and throw around some ideas here. But like I said, not much in the way of fresh news this morning.
Yeah, the funds got short another 25,000 contracts last week as of Tuesday. So that put them short over 340,000 contracts of corn. They did add a few short beans, but more in the oil and meal side. So the products continue to get hammered as well on the short side from managed money. Board crush margins are down to 70 cents off the May. So, yeah, it's been a pretty ugly market here for the long side. We're going into first notice day on Wednesday or the day after Wednesday, as Dan said. And that's basically the end of the road for basis-only contracts. I think a lot of those have been cleaned up so far. But, obviously the market's still fearing the long side roll going into first notice day. We hit new lows last night, like the March D's corn, for example, that's down past 51 cents. So we're getting really close to that 60% of full carry number. That's been a big target here last couple of rolls, 60% of full carry going out to new crop 24. So I'd be very curious to see what Thursday, Friday brings, and Monday, Tuesday next week as we come out of first notice day.
Yeah, Justin, you've been at this a long time. I don't want to age you, but I mean, can you ever begin to think about, a scenario that this has been like this before? I mean, just this continuous momentum every day, how they pounding cash corn.
Yeah, I mean, not very many for sure. This might be the only one this time of year that I can remember. Usually if you're, on a downside move sustained every day, it's when you're coming out of a big summer market or, where everyone's kind of sitting on the long side and liquidating, those long positions. So, I don't know that I've seen it where it's, and I guess we could be liquidating the farmer long position, right? So that's just kind of a new structural thing that we haven't really seen too much in the past. Maybe we have so much storage now that we can, farmers can kick the can down the road longer than they used to, right? We used to get that seasonal low kind of SEP 1 to Nov 1, somewhere in there. When people had to, sell a lot of corn off the combine, free up some cash, those kinds of things. Now with these, free DP, these basis only contracts that a lot of elevators are offering, that's another virtual form of storage with a big cost associated with it. So, that's one of the unintended consequences of these trades or of these positions, these long basis only contracts through the elevator, is it's not mark to market. There's no margin call, right? If a trader, hedge fund, a commercial, anybody else, bought a futures contract and the market kept going down every day, you get out because you get margined out, you get worn out. A lot of these are kind of out of sight, out of mind. And I think a lot of growers woke up one day and they're down $1, so I think that is one of the unintended consequences of these kinds of things. So, I'll be curious to see what, how these evolve going forward. But I think that's what's going on. We've been talking about the long position. I think I underestimated for sure how long that farmer position actually was going into the end of the year. And you've anecdotal evidence now, and you're seeing, talking to commercials, talking to people, and how quiet it was up until the last, few weeks. So I think this last, the funds, we can blame them. Obviously, they've helped press this thing lower, kind of front running this. But at the same time, I think you're getting farmers that are being forced to have to price it, some of those things. And we're not having that big demand show up to offset it, right? We don't have the export demand to come in, and we're not seeing China come in on a 15-day lower corn market and buy a bunch, right? Ukraine's funding us on the physical side. So we just don't have the fundamental demand right now to offset this really small window where people are being forced to sell. So it's just, we'll see if that, to Dustin's point, I would think there's a strong rebalance of that after first notice day. And then we've set crop insurance and we're going into the spring. We're going into planting, going into acreage report. So again, it's much lower than I thought we'd be on today's date by at least 30, 40 cents. But that being said, I do think, that I don't see a lot of upside to being short a whole bunch of 395 corn going into the growing season.
Yeah, I'm going to show a chart here too. A lot of times, to your point, that price discovery window is known in AgYield because of all those bushels that need to come up right off the combine to go directly to the delivery point. The ways that this industry has figured out a way not to sell corn through basis only, through free DP, those have grown over the last 10 years, no question. And when you had, prior years where, a grower ended up having a little bit better yield than expected, and they discover that in AgYield, they're more willing sellers a lot of times coming out of a year like that. One, I think, perfect storm situation that may have come up this year was that we did come off of very strong balance sheets from the prior year. So your JFM timeframe for selling last year was in the sixes, right? In early 2023. So there were strong balance sheets, no question, kind of coming out of last year and into harvest of 23. And recency bias said that, $5 corn was not a very good price after 3 years in a row of trading in the high fives, lower sixes, sevens in some cases. This sell-off is one of the more structured ones that I think I've ever seen, doing this since 2007, right? And it's only accelerated in the last couple of weeks here, and funds are record short. This looks like a huge puke trade to us, right? That people are selling not because they want to, but because they need to. They're running out of time, and they're running out of cash going into loan renewal season, right? So if that's the case, again, we don't know what first notice day is going to do, but we've often seen first notice day weakness followed by first notice day strength. I wouldn't be surprised to see that. I don't want to make a call for that right now, but it's just if you're piling too many of these alongside market participants all within 1 week window, once that pressure comes off the market, a lot of times we see a rebound. Anyone's guess to see if that happens or not next week, but that's why I'm very curious to see what Thursday, Friday brings, and Monday, Tuesday, just to get a glimpse of it at least. So,
yeah, that last first notice day bounce was about 20 cents, 22 cents in just a few days.
Yeah, in December there, Jason.
Yeah, and you kind of see it on that chart. It looks like a little nothing now since we've moved so far away from it. But I was just looking at, we broke the week of first notice day off the December contract. Monday, Tuesday was lower by 10 to 12 cents. And then we rallied. I think we probably finished the week higher, actually. And then we continued to push a little higher for a few days, and, that was it. But
and that was we talked about the time, hindsight here a little bit, but all the evidence that we had of producers rolling those long only basis contracts from Dece to March instead of pricing them. I remember Dustin, we talking about like, wow, March could be ugly once we get there. We'll have to remember that. But it went straight, usually that happens kind of 2 weeks leading into it, not literally from one expiration to the other. And we had that first notice day rally off the Dece, and then when it failed, the old saying is a failed first notice day rally, you got to get out, right? And once it took those out, it's never looked back. So I think that's the most unique part there.
Hedge funds never let off the gas. Is what's probably a little bit different this time. Is I think they probably saw the writing on the wall a little bit better than anyone. And that's where the selling pressure came in. They pre-sold the farmer.
Mm-hmm.
So,
yep.
Not to cut you off there. Sorry.
No, absolutely. And you didn't have the commercial buying. I do think the commercial is obviously beginning long to offset the fund position. But when you mix in the farmer selling with it, there's probably not enough end user buying, at these prices. Or certainly we'll see if there is a 395. There wasn't at 495. Let's put it that way. So we're searching for demand here, but things, right now I think we're focusing on having a really good safrinha crop, no export demand. I mean, prices a lot of times dictate what we think the fundamentals are. So because it's been acting so bad, now everyone's, in my opinion, flipping to worst case scenario for everything. Perfect South America, bunch of corn acres here, going to go in great. China's never going to buy stuff again, so that kind of tends to follow price action. If we were to rally 50 cents from December to March, and nothing else changed, we'd be making up fundamentals to go with that price movement. So I think it is pretty doom and gloom right now, but right now it's like we said, the trend's still down, and you gotta see something bottom first before you can get too excited.
Dust, we were talking a little bit on Friday. Did you see anything that opened your eyes on open interest from Friday, given option expiration and the way that things were being offset? I know we were going to look at that a little bit.
Yeah. I mean, not really. I mean, a little bit. March option open interest was obviously very, very short going into it. Yeah. And in typical fashion, going into first notice day, you're going to see open interest reports collapse. That's just how it is. So a lot of those were pre-offset. Those options is clearly what happened.
Very good. Justin talked a little bit about safrinha. Jace, you and I looked at a little bit of South American weather here this morning, just because it's kind of taken a back seat to price action a little bit. By some of the individuals we follow, they do have, you were saying maybe a 20% or so less of full rain forecast, but at the same time, 80% still pretty good coverage for 10 to 12 days out forward.
Yeah, we've leaned, and Dustin's mentioned this, right? We have we're a customer of Crop Profit, I should say. We kind of lean heavily on their software and some of the data that they provide. So looking at like their precipitation anomaly, they did a really good job of like weighing it by crop, not only for the U.S. but also for Brazil and Argentina, and they break it down by first season corn, second season corn. So if you look at like the European 2-week forecast, we're expecting below normal precip when you look at kind of the corn crop or soybean crop, but it's like 80-85% of normal in the next couple of weeks. Argentina is kind of 100%. So yeah, a little dry for both the GFS and the European, but nothing. They've had such a good start, and it's relatively early, and it's got to get a lot worse, I would think, to get markets too excited about it. So
yeah, I would say too, just on that crop profit topic. Last summer, I think there was a lot of emotions running around about the conditions we were receiving. I think that definitely helped tone down our emotion a little bit for different areas of our customer base. There was a lot of surprise, I would say, from many growers in these drought regions of where yields still came in at, where I think Crop Profit certainly helped us, tone down that emotion and maybe get a little bit more aggressive in many cases on hedging for different customers. So they've been a very, very good asset.
Absolutely.
Yeah, it's nice. It integrates right into AgYield too. So, for folks that maybe, can tend to be a little more conservative on yield estimates and things like that, it's a nice tool that we use to spur conversation and, keep focused on, realistic prospects for what the crop could be. Helps our guys a lot. We're going to be coming into the open here, fellas. Real quick, I know Ryland is not on here today. He's going to be back with us tomorrow. But just a couple of highlights from cattle on feed from Friday. On feed numbers came back at 100.1%. That was just slightly lower than what was expected. Placements was the big surprise on the report at 88.4. percent. They were looking for like 93, but it was some estimates had that number considerably less from where they came in. So initial reports are calling cattle just a little bit lower here this morning, which we just opened, and they are. And then marketings came back at 99.8%, which was pretty much in line with expectations. Rylan will have a little bit more to fill us in on there tomorrow, but I just wanted to give guys a heads up as we start the morning. Coming into the grain markets here, March corn's down 4.5, 395 1/4. March soybeans are still up 2 1/4, 1135 1/4, and March Chicago wheat now down 7, 566 1/2. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Every day that the markets are open. Appreciate everybody tuning in this morning. Thanks, guys. Good conversation. If anybody needs anything, please don't hesitate to reach out. You can give us a call or reach out to us at info@agyield.com. And hope everybody has a good start to the week, and we look forward to talking to you tomorrow. Have a great day.
Yeah, thanks, Dan.